All right, let's talk about RGB. We're digging into their Q1 fiscal 2026 earnings call, and wow, this one's a head-scratcher. It's like the company is telling two completely different stories at the exact same time, depending on which line of the report you look at.
So here's how we're going to unpack this whole thing. First, we'll dive into those numbers that sent such a confusing signal. Then, we'll get into management's new playbook, what they're actually doing to turn the ship around. After that, we'll look at why the stock fell, even with some good news in the mix. And finally, I'll give you our take, what we're watching for in the next quarter.
Okay, let's get right into the results. I mean, this quarter was a perfect example of a good news, bad news situation. It really put investors in a tough spot.
So check this out. On one hand, you've got a massive win on earnings. Wall Street was actually bracing for a loss, but RGP pulled a rabbit out of the hat and posted a 3-cent per share profit. That's a huge beat. But on the other hand, look at that revenue. Oof. They came in at $120.2 million, which was nearly $15 million shy of what everyone was expecting. A big miss.
And the good news on the profit side just keeps going. Their gross margin expanded by 300 basis points. That's a full 3 percentage points, hitting 39.5%. Now, this is a really big deal. It tells us their new strategy of going after more profitable work and really watching their costs, well, it's actually paying off.
And you know what's giving them the runway to make all these strategic changes? Their balance sheet. It is rock solid. They're sitting on over $77 million in cash, they have zero debt on their credit line, and they're keeping their dividend steady. That's the kind of financial cushion that lets you weather a storm and invest in a turnaround.
So, they've got this war chest, right? But what's the plan? Well, RGP is not just waiting for the economy to get better. Nope, they are actively in the middle of a pretty major overhaul.
And CEO Kate Duchesne was super clear about this on the call. She said this is a purposeful transformation. In other words, they're intentionally moving away from the lower margin staffing work and trying to climb up the value chain to become a much more specialized high-end consulting firm.
And this whole pivot really boils down to 4 key moves. First, they're focusing on those high-value services, like advising CFOs and digital transformation projects. Second, they're rolling out new tech to get an edge. Third, they're bringing in fresh leadership to spearhead the change. And fourth, they're hunting bigger game, chasing those larger, more strategic 7-figure contracts. It's a bold gambit for sure.
Okay, so RGP lays out this detailed plan. It sounds pretty good on paper, right? Well, the market was not convinced. Let's get into why the stock actually took a dive after the announcement.
And bam, the day after the earnings call, the stock dropped 4%, and it did so on heavy trading volume. You know, when that happens, it's the market sending a really clear message, and that message was not a positive one.
At the end of the day, here's what it all comes down to for investors: growth. That big miss on revenue and the kind of weak forecast for the next quarter, it just completely overshadowed the surprise profit. The market is basically screaming, we don't really care about your profit margins if your sales are shrinking.
And you have to put this in context. This isn't just a one-day thing. The stock has had a rough go of it, down over 45% in the last year, while the S&P 500 is up double digits. So when you have that kind of track record, investors just have very little patience for any more bad news on the revenue front.
So, that's the story so far. It's messy. The big question is, what happens now? Let's shift gears and look ahead. Let's talk about what we're expecting from RGP in the next few months. Really, it all boils down to one single question. Can this new strategy actually stop the bleeding on the top line? Is this big pivot to higher value services going to be the thing that finally gets this company growing again? That's what everyone wants to know. So here's our call for next quarter. We see revenue landing somewhere in the middle of the company's own guidance. Why? Because those bigger, more complex deals they're chasing, well, they just take longer to close. We don't see a quick snapback. On the plus side, we do think they'll stay profitable. But for the stock, we think it's going to be stuck in this range. The market is firmly in a show-me state right now.
And for all those reasons, we're slapping a market perform rating on RGP. Look, we think the strategy makes sense, it's the right move for the long term, but with that big revenue question mark still hanging out there, we're staying on the sidelines. We need to see some real concrete proof that the sales decline has bottomed out before we can get more constructive here. And just one final very important thing before we wrap up. This analysis is for informational purposes only. It is absolutely not financial advice. You should always do your own homework before making any investment decisions.